Hi, grade 12s. So what we have in front of us is question number two of the June 2025 Free State Department paper. And this specific question is manufacturing. Okay, now for most of us, manufacturing is usually where we can score some marks if we know our formats once again and if we understand what is actually happening. And this is also something that you can do quite fast if you have studied for this. So hopefully in this explanation in this video, I'm going to give you some tips on or make some things with regarding to the accounting for the manufacturing process a bit more clear to you. Okay, so for the specific question, for the specific paper, manufacturing counted the most marks out of the 150 marks. It counted 55 marks, and the learners had 45 minutes to complete this question. Now, the first 4 marks, as we can see, the first 4 marks of this question, question number two, was concepts. Okay. They are testing your cost accounting concepts or your manufacturing concepts. Okay. So we know how this works, right? So choose one cost account for each of the following descriptions. Write only the cost account next to the question numbers 2.1.1 to 2.1.4 in the answer book. Very easy, and it's something that you can do quite fast. But you please have to be focused. You don't want to lose any of the easy marks over here. Okay, so reading through your theory, which is actually one of the steps. I will post my steps or a video on my steps to prepare or to study for an exam. That's one of your steps that I suggest that you do for when you study for accounting is to please don't just focus on the actual numbers. You have to read through all the theory in your book to just have an understanding of this. Okay. So 2.1.1, administration. They say the cost item. So administration. All right. So this is the cost department of administration. Okay. So all of our administration transactions and costs will go to administration, right? Now, let's have a look at, I actually always suggest that you start at your description and you go A, B, C, D, and then you immediately match, because these words are usually very short, and then you only have to read this side once, which is usually the longer side. So you do save some time. So let's do it this way around, because we can see 2.1.1 is administration, 2.1.2 is factory overheads, 2.1.3 is our selling and distribution department or cost item, and 2.1.4 is your direct labor. Okay, so let's read number A and then we match it to one of these, and then we can also immediately write the answer over here. So A, salary of the factory foreman. Okay, so salary of the factory foreman. So let's just highlight this because we also then know we don't actually have to, but salary of the factory foreman. It's just for fun. Let's just do it for the fun. All right, let's just change the color also because we've been doing quite a few. I haven't used this blue yet. All right, so the salary of the factory foreman, guys. The factory foreman is involved in my production process, right? But he is not involved in the making of the of the product, in the manufacturing of the product. Okay. So if someone is not directly involved in the manufacturing of the product, then it would go to factory overheads. Okay, so A is a factory overhead. All right, so at 2.1.2, you can go write A. So let's go to our answer sheet 2.1.2, and there you can go and write, okay, I know that the salary of the factory foreman is definitely a factory overhead. Okay, perfect. Then we go to number B. Let's highlight number B. This is then depreciation on office equipment. Okay, so depreciation. All right, that is not what I want. Okay, depreciation on office equipment. Okay, so guys, office equipment, right? Depreciation is the expense, right? The cost account specifically. Depreciation on office equipment. Okay, so office equipment has got nothing to do, guys. The word office, nothing to do with my manufacturing um, um, process, right? So it's going to be under administration. Okay, so in the office, we do our administration. So depreciation on office equipment is definitely 2.1.1. It will fall under administration. So anything office related, please, that would be costed under administration. So number B will go to 2.1.1. Okay, so number B will go to 2.1.1. 2.1.1, that the answer for that is going to be B. All right. Then we move on to number C, and this is the pension fund contributions paid, okay, on behalf of the workers. Okay, so we know it's some sort of labor, right? It can be indirect labor, or it can be our direct labor, okay? Paid on behalf of workers. It might also be someone in the admin or selling and distribution, okay? In the production process, guys, this word over here, production process. So it is one of our workers, right? But it is within the production process. So this specific worker, the pension fund contributions that we are paying is for workers directly involved in the production process, guys. Okay, so when we pay our workers, okay, even if it is contributions, when we pay our workers that are within the production process, then it's obviously direct labor. Okay, so any worker that is directly involved in the production process, that will then fall under direct labor, under the cost item direct labor. Okay, so number C, yes, number C will then go to 2.1.4, which is direct labor. So 2.1.4, you can go and write your C over there. And then lastly, we have to have a look at number D. Now, let's highlight the important bits of number D. They say bad debts. Okay, already, guys, these first two words already tells you, and obviously by method of elimination, we know that number D has to go to 2.1.3, and that is selling and distribution costs. But just for you to understand, is that bad debts, guys, why does bad debts written off during the financial year, why is it under the cost item selling and distribution costs, guys? Because we have to had sold, we have to have sold specific products to a customer for their debts to become bad. Okay, so that is why it relates to selling and distribution, because a sales transaction first has to happen before a selling on credit, obviously, before a debt can become bad. So bad debts written off is definitely a selling and distribution cost. So therefore, that is where the D will go. Okay, so number D, that is where number D is. Okay, perfect. So there we have answered 2.1. I hope this cleared some of your uncertainties with regards to cost items. So just read very carefully, the salary, yes, salary of who? Factory foreman. Okay, this guy is not part of directly part of making the product, so therefore it will fall under factory overheads. Okay, it's not direct labor, it will be factory overheads. Depreciation, but on what? On office equipment, office and admin, so it's administration. Workers in the production process, that is our direct labor, and then bad debts is always connected to selling and distribution costs. So that was your first 4 marks. Nice and easy. Okay. Then we move on to 2.2, which is the detail of what we learn in grade 12 with regards to manufacturing. Now let's read the information. We have our questions and our information on the left-hand side of the screen. And then on the right-hand side, we have some space to answer the questions. Okay. Now, let's just read the information together. They say Dada's Manufacturers is the name of the manufacturing company. This information relates to the financial year ended 28 February 2025. So that is our financial year. Okay. That is our financial year. Okay. 28 February 2025. So we then know that the start of our financial year is then going to be the 1st of March. Okay. Let's write the full word. The 1st of March 2024 then, right? So the 1st of March 2024 is then going to be the start of our financial year. Okay, if it ends on the 28th of Feb. All right. The business manufactures golf shirts. So we are going to highlight golf shirts for sure, guys. Okay, so we definitely are going to highlight that. Don't just read over everything in a paper. You have to know, guys, especially in manufacturing, you have to know what is being manufactured. Why? Because when you think of a golf shirt, what do you think of? You think of thread. You think of the specific material, whether it's probably cotton, right? You think of buttons. That's basically what I can think of. But it's for you to read in the information, should they break it down like that, so that you know this is what my direct materials are, that you can see in the finished product. So that is something that is very important, to understand what we are making, so that you can know when you read this, okay, buttons is going to be a direct material, thread is going to be a direct material, because all of that is going into my final product. So that is why you have to understand or know what the business is manufacturing, so that you can identify specific direct materials. Okay. Golf shirts required. Let's read through everything so that we then know where our information fits. Okay. 2.2.1, calculate the direct labor cost on 28 February 2025 year end for 4 marks. Okay. So we have to calculate direct labor. Okay, guys. And then when we think of this direct labor, this is then usually the number of hours that workers that produce our products, that produce these golf shirts, that actually make them. Okay, how many hours are my workers needing to produce golf shirts? So your direct labor calculation is going to be number of hours times a rate per hour. Guys, that is what you always can expect with direct labor. Okay. So we know it's going to be that type of calculation. Okay. So we are going to look for that information when it comes to direct labor, when they talk about hours, and when they talk about rates per hour, and when they talk about overtime, and when they talk about it's everything that we pay to our workers working directly on the manufacturing line. Okay. And that could also be contributions. Then 2.2.2, prepare the factory overhead cost note on 28 February 2025. So they want the factory overhead cost note. Okay, so what are our factory overheads, guys? This is the classification into each cost item is extremely important. So the best that I could explain this to you is we have our direct labor, right? That is separate. We're going to do that in 2.2.1. Then we also have our direct material, right? So our direct labor and our direct material, that they make up our prime cost, right? Okay, so that is the material and the hours that go into manufacturing golf shirts. Okay, so what I the easiest way to remember what falls under factory overheads, you can just tell yourself everything, every cost that I incur that relates to my factory, okay, that relates to my factory that is not direct labor and direct material. That's the easiest way that you can remember. All costs, right, that um, relate to the factory. Okay, everything that says factory, 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 it goes into factory overhead, except if it is a direct labor or a direct material. Then it obviously will go to direct labor or direct material. Everything else goes to factory overhead. Okay, that relates to the factory. All right, so that is the best way to explain how to classify your costs that go into this note. Okay. Then 2.2.3, complete the production cost statement on 28 February 2025. Okay, so the production cost statement, all right, for 7 marks. Guys, we have to understand why we set up the production cost statement, okay? That is to calculate the cost of my finished goods, okay? So the cost of my finished goods for the financial year. That is the reason why we set up the production cost statement. What did my production actually cost me during this financial year for my completed or finished goods? Okay. That is what that statement is for. And then we also have the abridged statement of comprehensive income or the income statements on 28 February 2025. So then we have the income statements, a statement of comprehension, statement of comprehensive income for the year. Okay, so guys, this is all the usual things that they ask. All right. So this is all format, right? And understanding what goes where. All right, so now we can go through our information and then we can go ahead. And remember, what I'm trying to tell you is you do not have time to scan through everything and to read through everything every time you want answers. So you know what your required is. Here is your information. Go through your information and put it where it belongs so that it's over and done with. Okay. So that is the approach that I would suggest. So let's go to information number A, which is our stock balances, guys. So our stock balances, it's very important, guys, to check these stock balances because the movement in your stock balances is actually your costing for the year. Okay. So let's just quickly go ahead and work through our stock balances and put them where they need to be. You are losing unnecessary marks when you ignore your stock balances. Okay, so let's quickly go through our stock balances and put them where they need to be on our answer sheets. Okay, so indirect material, this is the first stock balance that they provide. Okay, so let's have a highlighter for information number A, our stock balances. So the first stock balance is indirect material. Okay, guys, so this is material that you cannot see in the completed product. You cannot see the use of indirect materials in golf shirts, but it's needed to actually make in the process of making golf shirts. Okay, so as I said, if it's not a direct material or a direct labor and it still relates to the factory, then it goes to factory overheads. Remember that, guys. So indirect material, this just means that it's not directly a material that you can see in your golf shirt, but it's definitely used in the factory, in the manufacturing process. Okay, so therefore this indirect material, guys, this is going to be classified as a factory overhead. All right. Indirect material is a factory overhead. So let's go to our factory overhead cost notes. Here it is, 2.2.2, right? This is where our factory overhead costs are. You'll see that they already have the provisional factory expenses in over here, and they have the sundry expenses in over here as well. But we can know now already, just by looking at the stock balances, we know that indirect material is a factory overhead. So you can go and write indirect material over here. Okay, why are we even... I put this in Excel so that I don't have to write, because the handwriting is not always the best, guys. All right, so let's go ahead and then type in our indirect material. Okay, so we know that the indirect material goes over here. All right, but then we also can go and make our bracket, because we need to incorporate our stock balances, guys. So the indirect material, okay, it's already in here, factory overhead cost note. And then with your, we need to go and see what is our opening balances, guys. The opening balance, obviously 2024 is the opening balance, okay? So this is your opening, okay? Opening balances, and this is your closing balances, okay? All right, so that is something that needed to be done so that we have that correct, because why? We add our opening balances and we subtract our closing balances. Let's maybe just go and put that in if you did not know that. So you will add your opening balances to your costing calculations, and you will subtract your closing balances from your costing calculations. Okay, so indirect material. So we have to use the opening and closing balances. So the first part of your bracket is going to be your opening balance. So you're going to take your 5,790, guys, and then to that, with your indirect material, you have to add your opening balance, but then you also have to subtract your closing balance. But we also have to add our actual indirect materials that we purchased during the year. We have to add the total indirect materials here as well, which will be, where is our indirect materials purchase? Here it is. Can you see, guys? Over here, indirect materials purchased, 23,740. Okay, so it's nice and easy to see all of these things, guys. So can you see over here, indirect materials purchase? So it's your opening balance, okay, that we already have in our calculation. Then you add your indirect materials purchased of 23,740. So 23,740. We can go there and add that quickly. So we say plus the 23,740, right? 23,740. Let's just make sure, yes. Okay. And then you subtract your closing balance of 7,490. So subtract 7,490. And then you close your bracket, guys. And guess what? There you have completed your factory overhead cost, which is indirect material, the whole calculation for indirect material. Okay. So please now see, there you have your marks with your, or for your stock balances of indirect material already in there. Just by knowing your accounting, knowing your formats, you read something, you put it where it needs to be, you are done with it. Okay. So now we can go and write the answer for the indirect materials, and we can go and earn our marks. So you can quickly add up. So you can say 5,790 plus 23,740, and then minus 7,490. And then you would get your answer for your indirect materials. And that is then going to be 22,040 Rand. All right. So there you have a few marks in the bag already just by looking at your stock balances and knowing what to do with them. Okay, perfect. Then we move on to the next stock balances, which is our work in progress stock balances. Okay, so you have to immediately, when you see this, you have to know where does this or do these balances belong. Okay, so work in progress, this usually goes to our production cost statement. Okay, so our production cost statement, this is where it goes. Okay, so our, let's say, production PCT, production cost statement, this is where these two balances go. But will you see that, or you can see that we have the opening balance of 194,700, but we do not have the closing balance. Guys, do not waste too much time. Do not stress when you see a question mark. It will sort itself out in your production cost statement. Once you have put all your information in there, this just means that it's going to be a balancing figure and you get that balancing figure at the end of the day. So don't worry too much about this. Just go and make sure that your 194,700 is actually on your production cost statement. So here is my production cost statement at 2.2.3, production cost statement on 28 February. And now you can see, okay, my work in progress at the beginning of the year of 194,700 is already entered into my production cost statement. So I do not have to worry about my work in progress at all. Okay, so I can highlight that. The opening balance is already in there. Okay, and the closing balance is going to be a balancing figure on my production cost statement. We are done with that, and we are done with that as well. Then we move on to our finished goods, not finishing goods, finished goods. Okay, so our finished goods, we have an opening balance of 137,500, and we have a closing balance of 150,000 Rand. Okay, once again, you have to know your formats good enough to know exactly where we use these stock balances. Okay, so we use the finished goods stock balances. This we use to calculate our cost of sales, guys. So I'm just going to write COS. We use the finished goods stock balances to calculate our cost of sales. And within all of the required, where do we find cost of sales? We find it in the statement of comprehensive income, which is 2.2.4. So let's go to 2.2.4. There it is, right? And we know that we are going to use it over here within cost of sales. Once again, you can go ahead and you can open your brackets. Same thing, same principle, guys. You are going to add, can you see, add plus your opening balance, which is 137,500. Okay, 137,500. We are adding that. It's going to be a positive amount. Okay, guys, and then just like with indirect materials, we have to add something over here, which is a cost of the cost for the year, right? So just so that you know that we don't have that yet, okay? We are going to add something to this 137,500 opening stock balance for my finished goods, right? But this over here, this amount in our production cost statement, okay? The cost of production of my finished goods. Can you guys see that this 137,500 is a finished goods balance? And then over here, we also have finished goods. Can you see? So this is how you can remember that the final answer of your production cost statement, the cost of production of finished goods. So this answer over here, okay, whatever you are going to get over here as your final answer, cost of production of finished goods, that is then what you are going to write. That is what you are going to write over here. Okay, it wants to make a star. Great. Okay, so you are taking that. That is what you are going to add to the 137,500. Okay, so we cannot complete our calculation of cost of sales yet because we are waiting for this amount over here. But for us not to lose our marks, we already have this in our calculation of cost of sales. Now we just need to add the 150,000 to our calculation of cost of sales. So what do we do with a closing balance? We subtract a closing balance. So let's just go here. Okay, we don't want that. Okay, let's go here and subtract the 150,000 in our calculation. In the meantime, okay, because we are still waiting for the cost of production of finished goods, that it will be calculated over here, that we are going to add to the calculation of cost of sales. Okay, perfect, guys. So can you see that is how you earn a few marks already, okay? So make sure that your stock balances are represented everywhere in your formats, okay? Let's just quickly make sure that we understand why we have to incorporate these stock balances. When we have a look at indirect material, we already know what that is. I explained that just now, okay? But look over here. This 23,740 is what we purchased during the current year, okay? That is not necessarily what has gone into the production process. Do you guys understand? We want to calculate the costing, okay, for the current financial year. That means what we purchased and what we used in the production process. So this 23,740 for indirect materials purchased during the year, that is just what we bought. That's not necessarily the full amount that we used in our production process. That is why the 23,740 is not just the answer, okay? That is why we have to take this, we have to add the opening balance, because whatever was left of the indirect material at the end of the previous financial year will be added to what we purchased. So in total, we have this 5,790 plus the 23,740. We have this available, right? It's in stock. It's the indirect material, right? And then we are going to use this during our production process. So the concept is we are going to use this 5,790 rands up first, and then we will move over to use the indirect materials that we purchased within our production process. Okay, so these two added together is what we have that we can use in our production process. Do you guys understand? Okay, and then this minus 7,490 is what we have left at the end of the year. Okay, so what we have available in stock during the year that we can use in our production process, less what is left at the end of the year. That will give us what we used in the production process during the year, guys. And that's the concept of cost accounting. You want to see what was used in the production process, not what was bought, what was used in the production process, what was utilized. And then we can see that 22,040 rands of indirect material was actually used in this year's production process. That's the concept of using the opening and closing balances. Now let's go to work in progress. Okay, we know that the work in progress is over here. It goes to the production cost statement. There is our work in progress at the beginning of the year. Okay, so you have to study your formats, please, guys, especially of your production cost statement. Okay, so we know that work in progress at the beginning of the year goes over here. This line over here is open, and then over here you will write work in progress. Sorry, we need to add that. That's your work in progress at the end of the year. This is where your work in progress at the end of the year will go, guys. Okay. And you're going to write this in yourself because you have to study your whole format over here. So work in progress at the end of the year will be right above your cost of production of finished goods. We don't have that. That is a question mark, guys. But this amount over here is going to be in brackets. It's going to be subtracted. That is what your studying should show you. Or should tell you that this amount, the work in progress at the end of the year, will be a bracket amount. Why? Because closing balances are subtracted and opening balances are added. That is why the 194,700 is added and the work in progress at the end of the year will be subtracted. Guys, it's the same concept. Why we add and subtract it in the indirect material. Okay. Work in progress at the beginning of the year. What does that mean? It means it is a t-shirt, a golf shirt that we started to produce in the previous year, but by the end of the previous year, it wasn't completely done. Okay, so it's still in the process of being completed. That means that it will still need some material, still need indirect materials, still need supervision of the factory for foreman, it still needs to go through a certain percentage of the process to be completed. Do you guys understand? That's what work in progress means. It has started the production process, but it is not yet completed. Okay, so that is why we have work in progress at the beginning of the year. It's what we started last year. We started those golf shirts, but it's not completed. So there will still be some costing within the current financial year to complete these specific golf shirts. Okay, do you guys understand that? And then obviously we have to subtract the work in progress at the end of the year. All of these costs that we write over here in the production cost statements, that is basically this element over here that we will be adding to the work in progress. Okay, and then that is why we subtract the work in progress at the end of the year, because those are the shirts that are not completely done. Look here, cost of production of finished goods. Okay, can you see? So we work on the concept that the work in progress, the golf shirts that we started at the end of last year, that we couldn't complete, that we just moved over to this year, is the work in progress that we have to complete this year. So these 194,000 rands worth of work in progress, this will be, it will continue through the production process and it will become, can you see this arrow? It will become a finished good within the current financial year, okay, as we take it through its production process. So it becomes a completed finished good. That is why we add it to this production cost statement, okay? And then the work in progress at the end of the year, it's not a completed, it's not a finished good. So therefore, we also subtract it, okay? It cannot be part of the cost of production of our finished goods balance, okay? So that is why add and subtract the work in progress. Then we go to finished goods in itself over here. Over here, the finished goods, as we said, goes to cost of sales. It's part of our cost of sales calculation. We add it over here, okay? Finished goods. The finished goods at the beginning of the year. Once again, guys, it's cost of production of finished goods, okay? This is inventory balances over here. This is inventory balances. This is what we have available to sell. This is the cost of sales, the cost of our, sorry, it's not the cost of sales. It goes to cost of sales. This is the cost of manufacturing our golf shirts, okay? Perfect. So that is why we have to add, once again, the opening balance and subtract the closing balance and bring the cost of production of our finished goods. Okay, so the opening balance plus what we completed during the current financial year, that will give me my total golf shirts that we have had in stock during the current financial year. Okay, to sell, obviously, right? And then of this total, this 137,500 plus this total finished goods gives me my total golf shirts, right? That we can sell. But of these two things added together, we have not sold 150,000 rands worth of t-shirts. That is why we subtract the 150,000 rands worth of golf shirts, because we have not sold them. Do you guys understand that? So this plus this is what we have available to sell, okay? Sorry, to sell, less what we did not sell will give us the cost of what we actually sold. All right, perfect. Hopefully we understand the reason for the stock balances and how we use it now. Then we move on to information number B, which is my direct labor cost. And we can remember from what they ask us over here at 2.2.1, we have to calculate the direct labor cost on 28 February 2025. So information B, direct labor cost, is going to give me my 4 marks over here. Okay, so this is all of the information that we need to earn our 4 marks at 2.2.1. So let's get going. This is usually easy, guys. So as I said, we need our number of workers, okay, that is directly involved in manufacturing golf shirts, okay. We need the hours that they have worked, but we have to read carefully. It's the hours per worker, right? We have 8 workers, and each of them have worked 1,250 normal hours, okay? What do we pay them for these normal hours? 60 Rand, okay? Then these 8 workers of us, they also worked overtime, okay? How many hours per worker did they work overtime? 220 hours. What do we pay them for overtime hours? We pay them 90 Rand for overtime hours, okay? And then we have the employer's contributions, guys. Please add this to your calculations. Employer's contributions, that is what Dada's manufacturers, that is what they contribute to the medical aid, as we can see, and to the UIF. So 9% to medical aid. So it's a cost to the company, 1% to UIF. It's a cost to Dada's manufacturers. So it has to be part of direct labor. Please, guys. All right. And then what's very important is these percentages, 9% and 1%, on what is it based, guys? Please. It is of the basic wages. Okay, so you will see now what that means. Okay, this is my basic wages over here. So you are going to take your answer for your total basic wages and you are going to multiply it with 9 and 1% to get your employer's contributions. You are not going to include your total overtime hours to calculate the 9% and the 10% because it's based only on basic wages. Okay, now let's get going. So let's start with our basic wages. So it's going to be in components. So this is the first thing that we are going to do to earn our marks. Let's calculate the basic wages first. Okay, so we know we have, so we know we have 8 workers, right? So let's write them. So I would say that you go and write what you are busy with. So we are doing our basic wages first, okay? Basic wages. Okay, then you go and show your calculation for basic wages. That is going to be the number of workers. The number of workers for that get a basic wage is 8. What do? We say 8 workers and we multiply it with the number of hours worked per worker, which is 1,250 hours worked per worker. And then we also have to give them their money, pay them their money for the hours that they have worked. So then we multiply that with the 60 Rand for basic wages. Okay, and then we get the total answer for the basic wages. Let's quickly calculate that together. So it's 8 times 1250 times 60. That will give you 600,000 Rand, right? Okay, so the basic wages, guys, is 600,000 Rand. Nice and easy. Okay. Then we go to the second portion of our direct labor cost, which is the overtime. Okay, so number two is your second separate calculation is your overtime. Okay, so let's do that. So our overtime, I don't know why I just did that. Uh, all right, overtime. So let's go and write overtime in our answer sheet so that the marker knows that we are busy calculating. Because guys, sometimes you dream up, really, you dream up calculations that we don't know where you get them from. So at least tell us what you are trying to compute. Okay. So overtime. Okay. So how many workers worked overtime? 8 workers once again. So we are going to say our 8 workers. Okay. What were the hours of overtime that each of them worked? 220. Remember, it's per worker. So it's times 220. And then we have to multiply that with what we pay them per hour, and that is 90 Rand. Okay, there we go, 90 Rand. Okay, multiply all of that, and then we will see how much we pay for overtime. Times 8 times 220 hours times 90 Rand per hour, and that gives you 158,000. Okay, 158,400 Rand. Okay, 158,400. And then the last separate calculation that we need to do is the employer's contributions. Okay, guys, please remember that when we do this calculation, that we have to include the employer's contributions as well. Most of you only do the basic wages and overtime, but the employer's contributions is also a cost to the company. Okay, so let's go and write contributions. Okay, contributions. Perfect. Contributions. Guys, you can do it separately. You can do a calculation of 9% and call it medical aid and 1%, guys. But listen, to save some time, you don't have to split them between medical aid and UIF, right? You can just go and say, listen, 9% plus 1%. In total, there is 10% employers' contributions. Okay, make life easy for yourself. 10% employers' contributions. And we are going to multiply that 10%. We are going to multiply it with the basic wages, guys. Only the 600,000. Please remember that. So it's based on basic wages. So we are going to take our 600,000 Rand basic wages. We don't include the bonus over here, and we multiply this with the 10%. Okay. How do we get the 10%? It's the 9% medical aid plus the 1% UIF, total contribution 10%. It's based on your basic wage. So your answer, this is nice and easy. Your answer is then going to be 60,000 Rand if you put that into your calculator. Okay, guys, there are all your separate calculations for your direct labor. Now, all you have to do is you have to add your 600,000 plus your 158,400 plus your 60,000, and that would be your answer. Okay, so let's take our 600,000 plus 158,400 plus 60,000. There we go. So there we have our final answer for direct labor cost, and that is then going to be 818,400 Rand. There you have your 4 marks for 2.2.1. Done and dusted. Okay, I hope you guys understand that as well. All right, then we move on to 2.2.2. Okay, and we know over there they ask us to prepare the factory overhead cost note. Okay, so factory overhead cost note. Once again, please remember that for us to do 2.2.2, we have to know that a factory overhead is everything relating to the factory, all costs incurred that relate to the factory, which is not direct material and direct labor. All right. So now we are done with information A, guys. Look here. We are done with information A. We are done with information B. We can now move on to the rest of our information. Okay. And then this is the extract from the records for the year ended 28 February 2025. And here we can see that these are all of our costs. Okay, we already accounted for indirect materials purchased in our factory overheads. Now let's go through all of this. So guys, direct material cost of 975,900 Rand. This is obviously, it's going to be a direct material cost. Guys, can you see that this cost is already included, direct material cost? It's already included in my production cost statement, okay? That is where direct material cost goes, and it is already in there as a total cost, okay? Then we have our direct labor cost, which is a question mark, guys. Why is the direct labor cost a question mark? Because in 2.2.1, we had to calculate the direct labor cost. Can you see? So that is why that is a question mark, because you had to calculate the direct labor cost. Okay, so we know that our direct labor cost is the next item on the production cost statement. Okay, so now you can go ahead and write under direct material cost, you can go and write direct labor cost. Okay, direct labor cost. Okay, direct labor cost. And all you need to do is you have to go and write your, guys, why are we even doing this? Okay, I put this here so I can type it so it's more neat. So let's try that. All right, so let's type. We know that we have to write there direct labor cost. Okay, there we have our direct labor cost, guys. Okay, where does this cost come from? It comes from 2.2.1, which is 818,400. So let's put the 818,400 over here. So it's 818,400. Okay, there we go. It comes from 2.2.1. And then you had to know your format of your production cost statement to know that direct labor cost goes directly beneath your direct material cost. Okay, perfect. And then, guys, we can then also go ahead over here. We know that when we have our direct material cost and our direct labor cost within our production cost statement, we can add them together, right? Can you see there's a total line? So now we can add these two together. But what do we call it when we add direct material cost plus direct labor cost? We call that prime cost, okay? So we call that prime cost. Format studies, guys. You have to know that's what it is. So then you add your 975,900 Rand plus your 818,400, and then you will get your prime cost, which is 1,794,300 Rand. Okay, can you see there we are completing the production cost statement. Okay, perfect. So that is what we have so far. Then we can also go ahead and we can go and highlight the direct labor cost, because we just put it where it needs to be. Then we have provisional administration costs, guys, which is 275,550 Rand. That needs to go somewhere as a starting amount, right? Provisional administration costs, okay? The fact that they use provisional, the word provisional means there are still adjustments, and you would see that there are some errors. So there will be adjustments to some of these amounts over here. Okay, so your administration costs, guys, let's quickly think, where do we see administration costs? Admin cost has nothing to do with my factory. So it will not be in the factory overhead 2.2.2. It has nothing to do with production because it's admin, so it won't be in 2.2.3. So obviously, you will see your administration cost. Luckily for you, at 2.2.4, they gave you the whole format of the income statement. So you can see here is your administration cost, and they already put the provisional administration cost of 275,550. They already put that in the opening bracket for you for administration cost. Okay, so that is not an actual problem. Okay, we are going to have to read because there will be adjustments that's going to be made to this amount. So we have to be on the lookout with these errors. Then we move on to the provisional selling and distribution. Once again, selling and distribution has got nothing to do with production. So it won't be in 2.2.2, nothing to do with the factory, nothing to do with production. So that is why we will find selling and distribution costs in my income statement under other expenses. And there is my selling and distribution cost. The provisional is 112,475. Okay, so the provisional amount is already in there. Okay, perfect. Guys, if it wasn't there, as you went through these totals and balances, you would have put them in there. Then we get to provisional factory expenses. Guys, now we work with the word factory expenses, provisional factory expenses, excluding other factory-related expenses below. Okay, perfect. So they say there are other factory expenses over here. So this is the total factory expenses, excluding the ones that we see below here. All right, so you would see it's factory, guys. Factory expenses, that is then that's definitely synonym for factory overheads. Guys, that's what overhead means, by the way, right? Factory expenses. So factory expenses is your factory overheads. So it basically goes, it is part of your factory overhead cost. So provisional factory expenses, can you see provisional factory expenses? 413528. It is already in here. Okay. Can you see the problem over here, guys? Focus and listen and check this out. Is that this 413,528, okay, factory expenses goes under factory overhead. Can you see that they didn't open a bracket for it? Can you see they did not do this 413528, and then you can do blah blah blah, make your adjustments, right? They put it as a total, okay, already for you. So if they say it's provisional, can you see it's provisional? That means we're going to have to make some changes to this amount over here, okay? But they did not allow you over here to make changes to it, okay? Because they did not make a bracket and put it as a pre-adjustment amount, okay? So what do you do then, guys? Then you leave it exactly as it is. There the amount is. So, sorry, there the amount is already. Now, any adjustments that we make to this will have to be made in these four lines, in these four spaces that are still available. All right. So it's just exam technique. All right. So we don't make it in this line. We will make the adjustments over here. Okay. But let's highlight this. Okay. The 413,528 is in my calculation already. Okay. Then we go to sundry expenses. Usually the sundry expenses could be, it could go to any other factory segment, business segment. But can you see that the total 75,000 Rand for sundry expenses is under factory overheads? Look here. The total of 75,000 is in my factory overhead. So all these sundry expenses are factory related, and it's also over there. It's not as a pre-adjustment amount. So should we need to make adjustments to sundry expenses, we are going to have to make it over here, not over here. All right, so once again, that's already the total 75 is under factory overheads. And then the salary of the factory foreman, of 97,150, we saw already, guys. Look here. Look how they are helping you. Okay, not helping you if you got this incorrect. When you go to 2.1, can you see that salary of factory foreman over here? You already would have told yourself that it falls under factory overheads. Okay, so you know that the salary of the factory foreman, guys, the word factory tells you that it's going to be factory overheads. Okay, so the salary of the factory foreman is something that needs to be written in here. And you see it's not there yet. So you can go and write that. We are going to type it. Let's just remind myself that we want to type it. So the salary of the factory foreman needs to be written in here. And then you can go and write the pre-adjustment amount of 97,150. So 97,150. So you know that is where that goes. All right, so there we have that. So we can highlight that as well. And then lastly, factory insurance, guys. It's easy. The word factory is there, so it's going to be a factory overhead. So we know factory insurance of 78,827 has to be written in here in the factory overhead note. So factory, sorry, yeah, it's fine. Insurance, factory insurance, and then the pre-adjustment amount or the provisional amount or whatever is 78,827. Okay, guys, can you see this is the exam technique? Put everything where it needs to be as quickly as possible so that we can just know that when we have read through something once, it means that we are actually done with it. Okay. Okay, let's maybe just... Okay. All right. Now, let's have a look. Now we are done. I actually just wanted to draw a line through all of these opening balances, but now we can. Okay, we are done with all of that. Now we can go to our errors and we can go and make some adjustments, right, in the factory overhead note. So the following errors were noticed. Focus time. Water and electricity. Water and electricity. Guys, we know that the whole business uses water and electricity, right? So we have to apportion the water and electricity to selling and distribution, to administration, and then to our factory. So let's read what they say. Water and electricity were incorrectly recorded as 80,040 Rand. This is included in the provisional total. All right. It was incorrectly, so wrongly. It was a mistake, guys. We incorrectly recorded water and electricity as 80,040 that was included in the provisional total. Now, there is a small little mistake over here in this paper that we have to fix for you to be able to earn these marks, okay? So it had to have stated over here, guys, because it says included in the provisional total, okay? But we have 3 provisional totals. Can you guys see? We have 1, 2, 3 provisional totals. So which provisional total are they talking about? Okay, so they had to have said in the factory expenses provisional total. So that is what had to be added over here. Okay, factory expenses provisional total. Then you would be able to get this correct. Okay, cool. So recorded as 80, and this 80,040 was included in the factory expenses provisional total. So then they tell us 60% of the water and electricity account was allocated to the factory, So 60% belongs over here, okay, and 20% each to the administration and selling and distribution departments, okay, 20% each, okay. But then they also say it should have been, so the allocation is also wrong, okay. It should have been 80% to the factory and 10% to each, and 10% each to the other departments. Rectify the error. Okay, so we have to fix the allocation of water and electricity. It was wrongly allocated as 60-20-20. It should be 80% to the factory and 10% to admin, 10% to selling and distribution. So how do we fix this? This is the most difficult calculation in this question, but we need higher order calculations also. So let's just have a look. So this 80,000 over here, this incorrectly, that was incorrectly added to the factory expenses, this represents the wrong 60%. Do you guys agree with me, right? This 80,000 was added to the factory expenses, and this represents the 60%, the wrongly allocated 60%, right, of my total water and electricity. So it's very important to remember. Some of you might have taken this, I know, you took this amount and you multiplied it with 80 and with 10, and that is completely wrong. Why? Because we need the total water and electricity bill that we have to split 80, 10, 10. Do you guys understand? This 80,040 represents 60% that is included within the factory expenses. So to get your total, that's the main thing that you have to understand. So to get your total, you have to go from 60% to 100%. And how do we do that calculation, guys? All we do is you take the 80,040, right, which is 60% of your total water and electricity. So your 80,040, okay? And then what you do is you divide it with its percentage, okay? Don't go write 60. Okay, you can write 60% in your calculator, but that's just, I just work with decimals. 60% is 0.6 as a decimal. So you take your amount and you divide it by the percentage that it represents. And then that will give you, that answer will give you your total amount that the 60% was based on. So your total water and electricity. So take your 80,040, right? Divided by the 60% that it represents. And then you will get that this 60% was based on your total water and electricity bill of 133,400 Rand. Okay, so please remember that, guys. Okay, so now the total water and electricity bill is not the 80,000 because that is 60% of the bill. To get the total bill, take the 80 divided by the percentage that it represents, and you will get it back to 100%. So that is then 133,400. That is my total water and electricity bill. And now I take the 133,400 Rand, and then I multiply that with 80%, and I multiply that with 10 and 10%, okay, to get the correct answers. All right. But now remember, we have to make adjustments now, right? We have to make adjustments. So we are going to have to write that water and electricity of the factory is going to have to be adjusted, because remember, water and electricity falls within this provisional factory expenses over here, but we cannot make adjustments here because they already wrote it in. So we are going to have to write water and electricity over here, as I explained earlier. So water and electricity, water and electricity, there it is, as a separate line item. And we are going to show that it was wrongly included as 80,040 Rand, right? It was wrongly included as 80,040 Rand. So it was wrongly included as 80,040 Rand. We are going to have to make an adjustment to this amount to get it to the amount that it needs to be. Okay, now we can go ahead and calculate what it actually needs to be. So we are going to take for water and electricity, okay, for the factory, right? Okay, water and electricity, but specifically for our factory, what are we going to do? We are going to take the total water and electricity bill of 133,400. Okay, the total bill. What is the correct percentage? The correct percentage that we allocate is 80%. So we multiply this with 80%, and then we will get the correct amount that the water and electricity for the factory should be. So take 133,400 and we multiply it with 0.8 or 80%, and then you will get the correct amount for water and electricity should be 106,000 Rand 720. Guys, this is the correct amount for water and electricity. So let's go and write the correct amount for water and electricity. So we know that the total amount for water and electricity should be, we don't want to write it, we want to type it. It should be what we just calculated as 106,720, right? We know that is the correct amount for water and electricity. So you write it in your total column. And then over here, we can just go and say, okay, we have to beef it up from 80,000 to 106,000. So to get your adjustment amount, you can just say your 106,720 minus the wrong amount, the previous amount of 80,040. And then you would get your adjustment amount is 26,680. So obviously, no, we don't want to write, dude. Okay, type. So to finish your water and electricity, you are going to say, okay, we have to plus 26,680 and close your bracket to get to this correct amount of 106,720. So there we have fixed the water and electricity bill that was wrongly included over there. Okay. Oh no, wait. This will be double counting. Sorry. Remember, sorry guys, sorry. The water and electricity, this 80,000, okay, this is very important. This 80,000 is already in there. Okay, so if we do it like this, we will be double counting because the 80,000 is in there and the 80,000 is in here. So sorry, it shouldn't be like this. It should be in this calculation over here. We should actually take the answer over here should be the 26,680, right? Because we had to increase the water and electricity from the 80,040, which is already in there, to the 106,720. So that is why we only add the additional 26,680, okay? So this calculation will then look like this. You will take your 106,720, which is the electricity bill that it should be, the 80%. And from that, you subtract what it was, okay? So that you can see that your electricity should increase with the 26,680, okay? Perfect, that was that. That is how we fix the water and electricity for the factory. Okay, guys, but we also have to fix it for the administration and the selling, which has to go from 20% to 10%. So look, the water and electricity increased from 60 to 80. That is how you know that your adjustment should be added because your percentage had increased. Okay, but look at the for the admin and for the selling and distribution, look, your percentage decreased. So you are going to calculate your adjustment amount, and you are going to subtract it from these provisional totals. Do you guys understand? Because the percentage has to decrease. Okay, now once again, what we have to do is we have to uh, go and calculate our water and electricity. But now for our admin, guys, we can do it at once. It's going to be admin and our selling and distribution, because both of them are the same percentage. Do you guys understand? So it's going to be one selling and distribution. So it's going to be one calculation, which will give me the adjustment amount for both, because the mistake was 20 to 10 in both instances. So what we're going to do is we are going to say, listen, we are now going to, we did not have the previous incorrect amount. So we have to calculate the incorrect amount. We have to calculate this incorrect 20%. Do you guys understand? Because this incorrect 20% is already included over here and over there. It's already included over there. So they gave us the incorrect 80,000 for the factory, but they didn't give us the incorrect amount. They only gave us the percentages for the admin and for selling and distribution. So we have to go and calculate the incorrect amount and the correct amount, so that we can go and get the difference, which will be our adjustment amount. So the incorrect amount, guys, will be the total water and electricity, but it was wrongly multiplied with 20%, right? And then the correct amount is going to be the 133,400 times, it should only be 10%. So that's the correct amount. Okay, so let's do that. So 133,400 times 0.2, or the 20%, that will give you 26,680. Okay, so this is the wrong amount. So 26,680 was wrongly included over there and over there. So can you see, it should only be 10%. Okay, so when you take, this is nice and easy, 10%, just take one zero away there. So it will be 13,340. So this is the correct amount and this is the incorrect amount, but the incorrect amount was included over here. So we are going to have to reduce these two provisional totals with the difference between the incorrect and the correct. Okay, so we have to reduce it from this to this, okay, which is going to be the adjustment amount is then going to be the difference between these two, which is obviously 13,340. So there is our adjustment amount. So then we go to admin. Here we have our administration cost. Okay, we know that we have to subtract, right? Subtract 13,340 over here. Okay, why? Because we had it too high. We added a wrong amount that was too high. 13,340 Rand too high. So we have to reduce it. The same thing with selling and distribution cost. We are going to have to reduce it with the 13,340. Okay, very important, guys. All right. Now, that is how you should have tackled the wrong percentages over here. I hope you guys understand. As I said, this was the most difficult calculation in the paper. In the specific question. So this is how you go about getting your adjustment amount, okay? The reason why we subtract is because the percentage was too high that they already included in these two provisional costs. So we have to reduce these provisional totals with 13,340 Rand. Okay, so that is how we do that one. Then we move on to the next error. The next error talks about rent expense. Okay, so the amount for rent expense amounted to 125,000 Rand. Okay, So this is your total rent expense, guys. Good, it's a good thing. This is the total rent expense, right? So total. Can you see this is easier? It's going to be easier already because with water and electricity, we did not have the total. We had to work backwards to get the total. But luckily over here, we have the total for rent expense. So we can just now multiply it with the floor space, it seems. Rent should be divided between the three sections. We know that. We have to divide the rent between factory, administration, and then our selling and distribution segments. Okay, according to floor space, guys. So not according to percentage. Can you see that we allocated water and electricity according to percentages? Okay, we are allocating rent expense according to floor space. So we are going to have to do a little bit of fractions over here, which is really easy. Okay, so the factory is 1,000 square meters. The administration portion of the building is 200 square meters, and the selling and distribution portion of the building is 400 square meters. Okay, so what we do then with this information is we have to divide this 125,000 to factory administration and selling and distribution. So how do we do this? We say we are going to have, okay, for our factory, we're going to have a portion. For our admin department, we're going to have a portion. And for our selling and distribution, we are going to have a portion. So for each portion, we are going to say we are going to take our total floor space, our total rent expense. You always work with your total, guys, please. That's why it was necessary to calculate the total water and electricity. So you take your total cost, your total expense, okay, of 125, but we are going to apportion them differently. Factory, admin, and selling will get different portions based on the floor space. So guys, how we do this is factory is 1,000 square meters. So the floor space given, that would be your numerator. Okay, so it's 1,000, and your admin is 200. That is your numerator, and your selling and distribution is 400. Your numerator. What is the denominator going to be, guys? The denominator is where you add up. We need our total floor space. Okay, so your denominator will be 1,000 plus 200 plus 400, which will give me 1,600. So your denominator is 1,600 for each and every one of them. So they will have the same denominator, but different numerators. Okay, so that is how you apportion according to floor space. Okay, nice and easy. Now, basically over here, these, when you type this in your calculator, you will get your answer. But basically, those two zeros will cancel, so you can just multiply with 10 over 60. So let's say 125,000 times 10 divided by 16. That's going to give you 78,000. 78,125. Guys, it doesn't matter. You can multiply with 1,000 over 1,600. You will also get this answer. Okay, and then your admin, the rent expense for your admin. Once again, the zeros are gone, so it's going to be 125,000 times, it can actually be, it's times an eighth. But times it with 1 over 16, or an eighth, it will be 15,000. 15,625. Okay. And then lastly, for selling is you take your 125,000. Once again, the zeros will divide out, and then that would be a quarter. So, or you just times it with 400 over 1,600, or 4 over 16, or when you simplify the fraction even further, it's going to be a quarter. So it's times whatever you choose, and then that is then going to be 31,250. Okay. And then when you add up, just make sure that when you add all of this up, that your calculations were correct. So 78,125 plus 15,625 plus 31,250. When you add all of that up, it should give you your total rent expense of 125,000, because all we did over here was allocate the 125,000 to each one of these operating sections in my manufacturing business. So there we go. That's how you allocate a total expense between or using floor space. So let's go to our factory. We know that the 78,125, that is the rent expense for my factory. So that will go to factory overheads, right? So did I just say rice? Crazy. Okay, so rent expense. It might be because I'm in Korea and I'm saying rice. Rent expense is then your 78,000. What was it over here? It was 78,125. 78,125. You don't actually have to write that there, guys, because that is the final answer. So 78,125, that is your rent expense, okay? Then we're not done. We have to do the admin. The admin is 15,625. We have to add that to our administration costs. So to this calculation here, we know administration costs is in our income statement under other expenses. So we have to add the 15,625 to our admin cost. We can close our bracket and we can total that up. Let's quickly do the admin cost, which is 275,550 minus 13,340 plus 15,625. And that then gives you 277. It gives you 277,835. Okay, so that's the total for your administration cost. And then we just have to go to our selling and distribution, and we have to add the 31,250. Okay, so over here, we are going to say add, and then we are going to add the 31,250. That's the portion of the rent expense that goes to selling and distribution. Let's just do that so we can see the whole calculation. Okay, so there we have our whole calculation for selling and distribution costs. Now we can add everything together. 112,475 plus 13,340 plus, what did I just do? Did I just plus? It's minus 13,340 and plus 31,250. That would give you 130,000. Let's just write that over there. So the total for selling and distribution costs is 130,385. Okay, guys, can you see? There we have that. We calculated the rent expense, distributed to the different sections, and we put them where they needed to be. Then the factory foreman was on paid leave in February 2025. Okay, which is the last month of the year, right? Okay, paid leave. His salary for February was not recorded. Okay, his salary was not recorded. Salary for what? Salary for February 2025 was not recorded. Guys, let's just quickly stop and think. If we did not record the factory foreman's salary for February, we only have his salary for 11 months. Do you guys agree with me? Okay, because February, the last month of the year, is not recorded. So this factory, the salary of the factory foreman of 97,150, that is only for 11 months. Okay, let's just have our calculation ready. So our salary of our foreman Okay, when we just read that first sentence, that means that the total that we have of 97,150, right, that we have in our balance, that is only for 11 months because we did not record the 12 months salary yet. So this is what we have to understand from what they are telling us. The factory foreman received a 900 Rand monthly increase in his salary with effect from 1 January. Ooh, naughty. With effect from 1 January 2025. So they are trying to make this a bit more difficult by including an increase. Okay. So we are going to have to work with solving X over here. We know that this is how it works, unfortunately. So I always, or what I try to explain is that you have to have the number of months, which is 11 months, and then this 97,150 represents 11 months, right? And the 1 month that was not recorded, that is going to be our adjustment amount, right? Because we need to go and add that 12 month. We need to go and add that one extra month. We need to go and add, oh my goodness, that looks like a multiply. We have to go and take the 79,150 plus that last month's salary, and then we will have our total salary for him for the year. But we don't have that last month's salary. We don't have the February salary. So we are going to have to use solving X to get the salary for 1 month, which includes the increase of 900 Rand. This is what the concept is. So how we do this, guys, is we need to get our monthly salary. And then to that, by solving X, we need to get our normal monthly salary. And then to our normal monthly salary, we have to go and add the 900 Rand. Do you guys understand that? Because February will include the 900 Rand increase. So what we are going to do over here is we are going to split this between the months with the increase and the months without the increase. So for 10 months, right, for 10 months, we did not have an increase. Do you guys agree with me, right? Because only from January. So January and February, we had the increase of 900, but February is not included. So there's only one other month that has the increase. So therefore, for 10 months, there was no increase. That means from the end of March to the end of December, okay, there was no increase over there, okay? And then in January and February 2025, that is where the increases were. So 10 months, no increase. Okay, so it's 10 months times the normal salary. We always call the normal salary X, the one without the increase. Okay, so for 10 months, it was times your normal salary, right? And then it was for 1 month, goodness. For 1 month, it was times your normal salary, right? Which is X, but we had to add the 900 Rand. Do you guys understand? It's the normal salary plus 900 Rand for 1 month. Okay, yes. So that means that plus that will equal the 11 months 97,150. So that is how you write your equation to solve X with. All right, now it's easy. Guys, this 1 over here will not have an effect when you multiply that in. So it's going to be this 10x plus this 1x is going to be 11x, right? And then this 900, we're going to have to take over to there. It was plus 900, so we're going to have to deduct it over there. So say 97,150 less 900 Rand. that will give you 96,250. Now we can solve x by dividing it by 11. And remember, when we get the answer for x, that is your monthly, that is his monthly salary, 8,750. That is his monthly salary, guys, without the increase. That's always what plain X is. It's the monthly salary without the increase. But we know that because we want the salary for February, we are going to take the monthly salary without the increase, and we have to obviously then add the 900 Rand, and then we will have our adjustment amount, which is 9,650. And there we just calculated the salary for February that was not recorded. So obviously we will have to add 9,650. 9,650 is what we will have to add to the salary of the foreman. So let's go here to the salary of the foreman over there. Okay, and then we are just going to have to add the 9,650. And there we go. Then let's just add that. So it's the 9,650 plus the 97,150. And that's going to be 106,800 Rand. 106,800 Rand. There we have that as well. All right, guys, there we just did everything in terms of the errors. Okay, we did everything in terms of the errors. So now there were no errors in terms of the factory insurance. So we had the factory insurance. Can you see we had the factory insurance opened over here? So we can just go and close that bracket, and we can just go and write the 78,827 as the final answer. Okay, guys, can you see now that we worked through the errors, we've made our adjustments, now we can add up every single thing over here. Okay, yes, perfect. So let's go ahead and add up all of our factory overheads. We have our total factory overheads over here, and now we can just add them up to get the total factory overhead cost. So 413,528 plus 75,000 plus 22,040 plus 106,800 plus 78,827 plus 26,680 plus 78,125, and that gives you a total. I don't know why I just added everything on my freaking calculator when I'm on Excel. But anyway, all right, I could have just said equals and then just added up all of that, and then there is my total, guys. 801,000 Rand for factory overhead costs. All right, and there you have your factory overhead cost notes. Then we can go and complete our production cost statement. Once again, we have to know our formats. So the production cost statement on 28 February 2025. So we know that we have the first section already. We did that already. Direct material costs, 975,900, and our direct labor cost of 818,400. When you add these two things together, you get your prime cost. Okay. Remember that we actually have to go and add our factory overhead cost. All right, so let's do exactly that. Factory overhead cost. Okay, so factory overhead cost, that comes from our factory overhead cost note. Okay, let's just put them in the same frame. So 801,000 Rand. Okay, that is what my factory overhead cost is. So we are just going to put it in over here. So 801,000. There we have that. Once again, guys, it's a format that you have to study, please. All right. It's a format that you have to study, that it's direct material, direct labor equals prime cost. Then we add factory overhead cost, which comes from your factory overhead cost note. Okay. And then, according to the format that you have to study, you know that what you have to write over here is your total, goodness, is your total manufacturing cost. Total manufacturing cost, that's what you have to write over there. And then you add your prime cost plus your factory overhead. That is going to be your total manufacturing cost. So let's add those two together. Okay, and then you get 2,595,300 Rand. And then to that, to your total manufacturing cost, you add your work in progress at the beginning of the year to get just this normal total. There is nothing that you can leave this line open under work in progress at the beginning of the year. So let's add these two things together. Let's add those two things together. And then you get 2,790,000. Okay. And then your work in progress at the end of the year, we know that that was a question mark. Can you guys remember that? When we look here, see work in progress at the end of the year is a question mark. And we know that we have to subtract. Once again, it's a format that you have to study. You have to subtract your work in progress at the end of the year. We don't have that amount, but we know it has to be subtracted. We still don't have that amount. So we will need additional information to be able to get that amount. So let's go and read further E and F. They tell us over here that 27,500 golf shirts were produced at 95 Rand each. All right, guys. And then that is exactly what we need to calculate the cost of production of finished goods. Okay, so let's just erase what we had done over here because we need space to do the calculation. Okay, cost of production of finished goods. Can you see? So many golf shirts were produced, finished, right? At 95 Rand each. So this was our cost of production of finished goods. So there they give us our calculation to calculate this total over here. Okay, so we are going to say 27,500 golf shirts, and we are going to multiply it. The asterisk means multiply, and we are going to multiply it with 95 Rand each. That is what it cost us to produce a golf shirt is 95 Rand, and we produced 27,500. So guys, there we go. There is your calculation to calculate the cost of production of finished goods. So you can go ahead and you can say 27,500 and you multiply that with 95 Rand, and that would give you 2,612,500 Rand. Okay. So there we just used information E. We are done with information E as well. Now we can get our work in progress. Can you see we can get the work in progress at the end of the year, whatever needs to be in this bracket over here. Okay, because it's the difference between this over here, this amount, less the work in progress at the end of the year will give me the cost of production of finished goods. So you only have to say 2,790,000 less 2,612,500, and then that will give you the missing amount. Okay, so do that. Okay, we can just say equals this. Oh, goodness. Okay, wait. Let's just keep this on the calculator. And let's just undo stupid things. Okay, there we go. So you can say 2,790,000 and you subtract 2,612,500 from that, and then you would get 177,500. Okay, so 177,500, that is then the missing amount that we need. Okay, and that's your work in progress at the end of the year. See, that is how you do everything, and then we figure out our balancing amount right at the end of the year. Okay, perfect. Sorry, guys, for my phone ringing. It's too far to go and switch it off, so I'm just going to leave it. Lesson learned, switch off your phone. Anyway, okay, then information F is the sales amount. So the sales amount is 4,160,000 Rand. Can you guys see that it's already included in 2.2.4? So guys, there we are officially through all of our information. Okay, so now we can just complete 2.2.4 and then we are completely done with the biggest parts of this question. Okay, cost of sales. Can you see that we have this arrow over here to remind us that once we get the cost of production of finished goods, which we actually could have gotten by just reading all of the information, but anyway, we have it now. We have to remember to go and add this 2,612,500 Rand. We have to go and add it to our cost of sales. So let's do exactly that. 2,612,500 Rand, close your bracket, and then when you do that calculation, you are going to get your cost of sales. So 137,500 minus 150,000 plus 2,612,500, and there you get your cost of sales of 2.6 million. Now, basic, guys, basic things, cost of sales has to be in brackets, right? So it's 2.6 million in brackets. Please remember that. Okay, so guys, cost of sales, it's a finished goods calculation. Okay, then your gross profit. Gross profit we know is sales less cost of sales, and that is then 1,560,000. And then our other expenses we know is our administration cost and our selling and distribution, which we already calculated. So this other expenses is just a total. So we have to go ahead and we have to add these two. So we have to add those, and then that gives me that. But we also have to remember that that expenses is always a deduction. Okay. Okay. So expenses has to be deducted from our gross profit. So that is why this is a negative. Okay. And then to get the net profit for the year, we have to go and say it equals, we take our gross profit over there, and then we add or we subtract our other expenses. And there we have our net profit for the year, which is 1,151,780. Okay, so there we go. We are actually done, guys, with everything with regards to 2.2, which is data's manufacturers.